Hey everybody, stock chart of the day here. I don't know, I did this video like a few days ago from here. It's a beautiful day, by the way. It's been really hot with like no breeze recently, and at least there's a breeze here today, you know. So anyhow, yeah, it's a nice day. So I left my backpack up there. I'm making sure no one's gonna steal it. It's a nice backpack too. It's like a cooler pack, so you put ice in it, it keeps your drinks super cold because it's hot here today. But this is really nice. It's just when you have a little bit of a breeze, like 10 miles per hour, it makes all the difference in the world. Like, it's been completely stagnant, and you know, that's really rough. And I think the breeze is gonna pick up into early June. So what we're gonna talk about today is Dow theory. So, you know, I've talked about this scenario where, because we were kind of playing out where the market was looking a little bit like 29 or 87, where you have this like rally starting from the prior year, the market goes straight up, you have a little consolidation and the final blow off. I don't know if that's going to happen now, and I've always said that's a low probability event. That's happened twice in history. Like these other crashes, like, you know, like 1907 or like 1937, 1974, 2008. A lot of times the top happened the prior year or happened more like in the spring and then rolled over into the fall. So that could be what we're seeing here. And maybe we'll see some kind of head and shoulders topping formation. But the thing that's really worrying me is the garbage action in the Dow transports. And I noted that the Dow transports never went above their 2021 highs. You know, never did that. And so basically, and so you had a Dow sell signal really going from late last year when the Dow started to hit new highs. And I've said that these things can last 6 months, 9 months, 12 months sometimes. So, but what's really worrisome is that even when the Dow was rallying towards 40,000, you know, obviously we have this AI craze with NVIDIA, the transports are rolling over. And like, look, the transports are still a lot of the real economy. They're airlines, so travel, leisure. I think there's even a few, there's rental car companies in there. There's, I think there's a few the cruise lines are in there. Then there's stuff like FedEx, you know, which is shipping, you know, obviously goods and services. And then there's railroads, so movement of goods and services. So it's still the real economy. You know, we still, even with all this technology, right, we still need to buy things that are shipped in, that are moved. You know, a lot of oil is moved on railroads, right? And the economy comes to a standstill, you know, so that oil doesn't get moved anymore, right? So that's kind of what I'm thinking, you know. So is that the economy slowing? And actually, I'll do some stuff because I'm going to do a lot this week on retailers, stocks like stocks like Target and Lululemon really got killed in the last little bit. So yeah, I'll do stuff on that as well. So anyhow, I just want to talk about that transports. So now the Dow has come off hard. And to me, one of the real warning days was last week when NVIDIA came out with their earnings. I was like, okay, this is my theory, my thesis when I thought the market could blow off into the summer was NVIDIA would be the launching pad. You know, they're going to blow away earnings. I knew that. And then, you know, the stock was going to gap up, shorts were going to cover, and then everything would kind of get dragged up with it. The market dumped 600 points that day, even with NVIDIA moving. Even with NVIDIA continuing the rally, we obviously are getting follow through via short covering now in NVIDIA. And you know, basically that's it, you know? So, yeah, you know, Yeah, so basically, I think this is a warning sign. It doesn't mean that the market's going to start going down, but think of things like 2010, 2011. Then the big corrections actually happened in July. 2015, it was August. So these, 1998 was August. So these things can happen in the summer. So that's why you can never try to time it perfectly. Like, actually, Jesse Livermore, when he shorted the 1929 crash, was actually short in the spring and was getting hammered during that last blow off into the summer. So, in my trading blog, I have a trading blog where I have a very small portfolio of $20,000, $30,000. And I'm trying to show, like, look, this is what I do, how I can trade with some of the connections that I have, plus doing regular trades as well, but with a small amount of money. So I want to just for fun right now. So I've started it, and it's doing okay because one of the deals I had was up about 150% that I got out of. So, but anyhow, in the trading vlog, I'm going to start to get probably more defensive in it, and I don't really have any hedge positions in that little trading vlog, and I'll probably start. And they won't be the companies, there are a couple of companies I don't think people even think about, but I think are excellent shorts. So, and I don't know, like, could the market continue to grind higher? Sure, but I'm getting more of a feeling that this rollover, if you go look at the summer of 2008 or 2001, it was like, or 1937, the market peaked in March, April, and then, had a decline, and rallied back into June and really peaked in, it actually bottomed in June and rallied into August, and but fell all August, So these declines can start, and 2015 was the same way. The market kind of peaked, I think, in latter part of July, and then started to roll over slowly, and then kind of really got hit hard. I remember there was a day the Dow gapped down like 1,100 points. And that was a lot more back then, right? Like the Dow was probably more like 20,000 back then. So that's 5-6%. That's like 2,000 points today, right? So anyhow, because I start from further back, I'm not going to go as far as I usually go. So, and I always like to pace myself. So but the Dow transports, I think, are a real warning sign. No one even looks at stuff like the Dow there anymore. Stuff like that doesn't matter, right? Because AI robots are going to save us all, so, yeah, so I think that's a real warning sign, and something like I said, no one, hell, I think I'm the only one stupid enough or smart enough or whatever enough to talk about it. So I guess that's about it, I'll leave it at that. So below this, if you go to I'll have the link below this video on YouTube, and probably in the thumbnail I'll put the chart up, excuse me, of the Dow transports. But if you actually want to see the two real charts, you have to go to addictedtoprofits.net and see it excuse me, below this. So I'm going to leave it at that.